Well, thank you very much for taking the time to join me on this video. This is another one, actually part 5 in our series on real estate investment. If you recall, we've been talking about your money, how to increase your money. We started out talking not only about the concept of wealth, we talked about net worth, what your current net worth is, because it's always a good idea to know where you start a journey. But we saw that it isn't just your net worth, it's the growth in your net worth that's really important, where you're headed. We saw there's some ways you can alter that. You can save money, you can invest, or you can invest in revenue producing assets such as real estate. I want to build on that today, and I want to talk about how you can greatly increase your return on your investment through a principle we call leverage. But before I do, I need to take a minute or two and talk to you about debt. We as a society are awash with debt. And that's a change in thinking from years ago. When I was a kid growing up, there was a little jingle on television that said, "Never borrow money needlessly, just when you must." And it was actually a trust company that was putting on that advertisement, and their philosophy was cautious borrowing of money. That's not the way it is now. Now it's think of all the things you'd like to have. Stop dreaming and get it. If you want furniture, we'll make it easy. Nothing down and no payments for a year. If you want a car, we'll carry your first 3 payments for you. If you're getting close to maximizing your credit card, we'll increase your limit. And because along with that, interest rates are so low, money is so cheap, people are awash with debt. You know, when your parents told you, if you don't have the money to buy it, you shouldn't buy it, they were cautioning you against getting into this kind of debt that's plaguing a lot of people. And so we've got industries built around it. We've got debt consolidation industries. We've got credit counseling. We've got bankruptcy trustees. All these things to try and deal with debt. But let me say that not all debt is bad debt. And that's the differentiation we need to make. As a simple rule of thumb, if you're borrowing money to buy something that's going to diminish in value, a commodity that you're going to use and it's going to be done, whether it's a trip, whether it's food, whether it's furniture, whether it's a car, any of these things, they tend to be bad debt. That doesn't mean that you shouldn't ever do it. Sometimes it's necessary. But if you're buying something that is appreciating in value, and especially something that is revenue producing, then borrowing money or leveraging the purchase actually increases your return and increases your profitability. Leverage is making money through the use of somebody else's money. And as a simple rule of thumb, if I'm investing and it's returning a higher return than the cost of borrowing money, it makes sense to use borrowed money to buy it. If I can get a mortgage, for example, at 2.5%, but I'm getting a cap rate on my investment, that's the return on my investment of 7%, then that additional 4.5% is money in my pocket. And not only on the return on my investment, but the return on the bank's investment. Let me give you a simple example. Let's suppose you came into an inheritance and you had $500,000. Now don't let the number scare you. I'm just throwing it out for illustration purposes. Most of us don't have $500,000 to invest, and we may never. But some of us, if your house has gone up in value, if you owned it for a period of time, you would have that kind of equity take out of it. But let's not worry about it. Just for illustration purposes. You got $500,000 to invest. And you come across a property. It's an investment property. Maybe it's a triplex. And you can buy it for $500,000, and it'll give you a 7% cap rate or a 7% return. That means that you're going to get $35,000 in your pocket from the rent after you pay the expenses you have to pay, such as taxes and insurance and some upkeep and the utilities that you have to pay. So it makes you $35,000 a year. Year after year after year. And in fact, it's indexed to inflation because you raise the rent year after year. And so you got a $35,000 return. That's not bad. But instead of that, let's suppose you take that $500,000 and you buy 10 properties by putting 10% down. So you put $50,000 down on each property and you get a $450,000 mortgage on each property. So now instead of buying $500,000 worth of real estate, you buy $5 million worth of real estate. and you carry a $4.5 million mortgage in total. That sounds scary, but let's just review the math. I encourage people when they take out mortgages on investment property to try and amortize over no more than 15 years. That's how long it takes to pay off the debt. So for the next 15 years, you don't see that $35,000 coming in your pocket. You do get it. It comes in the way of part of it is paying off interest and part of it is retiring the debt. But you don't actually see it. So for the next 15 years, you're missing that $35,000 a year, or you're missing a total of about, I don't know what it is, $525,000. But 15 years from now, all 10 properties are paid for, and if they're giving you a 7% cap rate, now that means they're bringing in $350,000 a year. So after they're paid for, instead of getting $35,000 a year into retirement, you're getting $350,000 a year into retirement. And that's the power of leverage, the power of making money through somebody else's money. And the reason it works in real estate is because we talked about last week, real estate has utility. You can rent the property out, and you should, and the rent services the debt. It's the rent that you get in that pays off the mortgage, and 15 years from now, you enjoy a $350,000 a year pension instead of a $35,000 a year pension. That's the power of leverage, and we're going to take a specific close look at it again next week. I want to thank you very much for investing the time in these series. And listen, if you find these series advantageous, I want you to do something for me. Take a minute to like them and share them on Facebook. It'll help us get the word out, and we'll appreciate it so much. Thank you, and we'll talk to you again very shortly.